The most controversial market I think today is the cryptocurrency markets. I've never seen investors more divided as to be bullish or bearish on this market. And I think it's because the wild price swings that have been driven in the cryptocurrencies, especially in this case Bitcoin because it's the biggest cryptocurrency of them all, has caused such division. There have been tales of fortunes being made, and then there have been tales of fortunes being lost. It just depends on when you ended up investing into the cryptocurrency and then how long you held, which then leads to the obvious question of what does it mean for the future of cryptocurrencies. Bitcoin has obviously surged in recent years. 5 years ago Bitcoin was about $1,000 per coin, maybe 1,500, and now it's $30,000 per coin. So with such excessive returns, what does that mean for cryptocurrencies in the next 5 years? Is it going to go up to $1 million per coin, or even more? Is the sky's the limit? And I think that there are some core elements before I go into some of the discoveries I've made about Bitcoin. I think there's some core elements to learn or keep in mind, to go back to the basics of what drives a market, okay? So in the Bitcoin camp, there's obviously a lot of people who believe that Bitcoin is the ultimate safe haven. It's basically digital gold. And then in other camps, especially for those among the bears, they're saying, no, that's not digital gold. That's actually just a bubble. It's like the tulip bubble. It's worthless. It doesn't do anything. It's a speculative asset. It'll crash. And both camps have truth to them. So on one side, the cryptocurrency markets have exploded, and so that supports the bulls. And then on the other side, you've seen parts where the cryptocurrency market has imploded, and it's crashed. The market price has crashed from time to time. But no matter what, it's undeniable that the trend of cryptocurrencies is upward, and indeed they are explosive. So the best way to learn about what drives Bitcoin is to compare it to its competitors. And the major competitors to the cryptocurrency market are the bond markets, the stock market, and the precious metals market. So in the bull camp, there is the idea that Bitcoin is this new technology and that it's going to revolutionize the world, okay? That's what's driving some of these bulls. Others see it as the newest digital form of gold as a way to save yourself from the dollar because it's a limited amount. There's only a limited amount of each coin in circulation. Therefore, it gives its value, and because it's not, held by the dollar, it can be used for transactions digitally because we are in the 21st century. We're in the new millennium, and so the new millennium requires a new safe haven. However, what I find interesting is that Bitcoin tends to correlate in growth with the stock market. So in this chart that I'm showing you right here, Bitcoin is in red, and it's represented by this axis on the left, and the stock markets is represented here in green by the Wilshire 5000, and it's on this right axis. Now notice that this left axis is on an exponential scale, so that way it can kind of give you a better comparison. So Bitcoin's price has obviously exploded in great amounts to the stock market because the market right now is so much smaller than what the stock market is, allowing for that huge growth potential. But notice how it tends to trend pretty well with the stock market. When the stock market rises in price, Bitcoin rises in price. When the stock market falls in price, Bitcoin tends to fall in price. Now, it doesn't when it falls, sometimes it will fall by bigger amounts than the stock market. Now, it's kind of hidden here, but if you look at the exponential growth, if you look at this exponential axis here that's logarithmic, you can see how Bitcoin nearly chopped in half while the stock market would lose maybe 10 to 15%. So, that being said, is Bitcoin the new gold? Well, the answer is no, because gold does not really grow with the stock market. Gold is your anti-investment. Gold price goes up when the stock market price goes down. Or in real terms, if we were to go back to the inflationary times, when the stock market price is barely going up because of inflation, gold will then soar. Okay? Gold is what you invest in when all other investments have failed. That's what makes it the safe haven. Therefore, when the stock market goes up in price, gold's price will tend to go down. When the stock market goes down in price, gold's price will tend to go up. Bitcoin does not have that correlation or that negative correlation with the stock market. It actually has a positive correlation. It grows when the stock market grows. It falls when the stock market falls. Therefore, it functions like a traditional investment instead of a safe haven. Now, that being said, does that mean that Bitcoin is a speculative asset, something akin to a bubble? Given its huge growth in prices, I believe the answer is yes. In other words, I think what drives markets, what drives stocks in Bitcoin especially, is greed or optimism. The expectation that not only will the price grow, but whatever market it represents will grow as well. For Bitcoin, it's a new type of transaction technology that will become adopted by more and more companies as time goes on, which will give the coin value because now it's being traded as an alternative currency. In the stock market, you invest in a batch of companies who are providing goods and products to consumers and then receiving money and revenues and profits, which of course grows the value of the stock market. So I'm not here to say that Bitcoin has no value at all. But what I am saying is that these huge jumps in prices are unstable and they are likely caused by expansionary monetary policies. Just like the stock market is in a bubble, although the stock market and the stocks together do have a core value, Bitcoin is also in a bubble, and that's represented by its booms and busts. Just because it keeps rebounding from the booms does not, from the bust, does not justify that it is not a bubble. It still is a bubble, and it will crumble like all bubbles do when interest rates are forced up. To put the proof in the pudding here, what I'm going to show you is a comparison of the Bitcoin price to interest rates. So in this case, I'm showing you on the right-hand graph the 10-year Treasury, and in the blue, I'm showing you Bitcoin. So back in 2017, Bitcoin went through this huge growth in price. Actually, I'm going to go back to another one. I'm going to start here, okay? I'm going to start with the 2013. So back in 2013, this was the first time that Bitcoin jumped in price. It went from just over $100 a coin to over $1,000 a coin. So it multiplied by 10. And if you notice here, the 10-year Treasury rates had been dropping a little bit. And, this was at the time that we had QE going on. And then the interest rates started to go up. And once those 10-year rates climbed up to a certain points, in this case, it looked like it was above 2.75, pushing 3%, that caused Bitcoin's price to drop over time. Now in 2017, we see something similar take effect. So once again, Treasury rates were dropped, and they dropped down to 1.5%. So then Bitcoin starts to go into an upward trend. And even though Treasury rates corrected back up over to 2%, Bitcoin then soars in 2017 and reaches all-time highs. This is the time when Bitcoin would reach up to above $10,000 a coin, when it was really just $1,500 a year ago, or really 1,000. So it would multiply by 10 again. But once again, once the interest rates started to be forced up here, that's when Bitcoin's price started to tank. And it wouldn't be until the interest rates started dropping in late 2018, 2019, would Bitcoin go through another bull market. So then that brings us to today. Today, what's going on? Well, interest rates dropped from the Federal Reserve, lowering the Fed funds rate down to zero, so the 10-year Treasury rate plunged, and Bitcoin soon enough started going into another bull market, and it started soaring. But when interest rates started climbing back up because of inflation expectations, that seemed to cap off Bitcoin's price, and now Bitcoin has corrected. So that being said, it seems to me that, just like most speculative assets, Bitcoin is very, very, very interest rate sensitive. In this case, many have compared it to the dot-com bubble and to the NASDAQ 100 technology companies, and I tend to agree. This tends to function a lot like the 2000 bubble. Any change in interest rates can produce these huge volatile swings in Bitcoin's price. So with interest rates lowering recently, because money or treasury bonds have been circulated out of the economy due to the Federal Reserve and to banks holding them, will Bitcoin go through another jump in its price? Well, the answer is possibly. It possibly could if interest rates were to fall hard enough. Now, how far would they need to fall? I don't know. Maybe say if the 10-year dipped below 1% again, then I could see Bitcoin jumping again in price. What would cause those treasury rates to fall below 1%? I've been saying that inflation has been going up, so that should be forcing up the interest rates. True enough, but there is a situation that is developing over the next few months that may put a cap on treasury interest rates for a time being, or at least counter those inflationary forces, and that's the debt ceiling debate. So the Republicans have made it very clear that they are going to argue tooth and nail about raising the debt ceiling. They're going to wait till the last minute to raise the debt ceiling, which means that when Congress reaches that debt ceiling, when the government does reach that level, it will not be able to issue new debt. Meanwhile, the Federal Reserve is purchasing hundreds of billions of dollars of treasuries over the next few months, as well as other banks and investors buying them. That will reduce the amount of treasuries out of circulation and could indeed temporarily force those interest rates down just because there's less available. Now, all that being said, that's conducive that high inflationary forces don't just push up those interest rates. So in this case, although I do agree that Bitcoin is a speculative asset, it's a bubble, it is possible to make returns off of it, but my guess would be to base it off of the interest rates. If interest rates are low and cheap, especially if they are artificially low from Federal Reserve central bank policies like they are right now, it can be a bullish trend. But if inflationary forces take over, contrary to popular belief, I don't think that would necessarily push up Bitcoin's price versus its interest rate sensitivity. It's so sensitive to any change in interest rates, which inflation rates do force up, it could catastrophically destroy the price of the cryptocurrency. In other words, if the Federal Reserve were forced to start raising rates and the 10-year Treasury rate started pushing up to 2 to 3%, I could easily see Bitcoin crumbling well below $10,000 a coin. Now, I'm not saying that the Federal Reserve will. I mean, right now, they're sitting there buying, mortgage-backed securities and treasuries right now. They'd have to taper those off first. But what I am saying is that if inflation does start taking over and forcing up those interest rates, I could see a huge correction in the Bitcoin market. Now, like stocks and Bitcoin, eventually, because of the devaluation of the dollar, it will force those prices up. But right now, to me, it is grossly overvalued. So its recent crumble from around $60,000 a coin at the end of March to almost $30,000 a coin now tells me that there's still room to go to fall if the interest rates climb a little bit more. But like I said, if interest rates continue to drop and they drop to say around 1%, I wouldn't be surprised to see cryptos go through another bull market jump and possibly reclaim their highs around 50 to 60,000 or even higher. Guys, thank you for watching my video. If you like my content, please be sure to hit that like button and subscribe to my channel. Hit that notification bell and let me know what you think about all this in the comments section. Do you agree with me? Do you disagree with me? I know that what I'm giving you is kind of a simple linear analysis, but it's the best way that I know how to look at cryptocurrencies from a basic level. Until then, guys, I'll continue to post more content throughout the week. I'll let you know when I think of another topic to cover, but it looks like what I'm going to be waiting on is the money supply figures that are going to come out this week, and then the GDP numbers. So that's going to be the two things that I'm concentrating on this week, because those are going to factor into the future of markets and investments directly. Until then, I'll talk to you later.